Assalamualaikum warahmatullahi wabarakatuh. So today our group will be presenting about financial statement for single company in compliance with legal and regulatory requirements. This group is consists of 4 members, which is me, myself, Alandana binti Azhar, Mahazi bin Ahmad Kamal, Ashley Gadwina anak kahwin, and Suhaira Amelin binti Zakaria. So let's proceed to the first one, which is accounting policies. Accounting policies are the rules, practices, or procedures that a company's management team follows when preparing financial statements. Any accounting processes, calculation techniques, and reporting protocol for disclosure may be included. Accounting policies differ from accounting standards in that accounting principles are regulation, while accounting policies are the methods by which an organization follows such rule. The next one is example of accounting policies. The first one is valuation of using FIFO, average cost, or other suitable basis as per IAS 2. The next one is classification, presentation, and measurement of financial assets and liabilities under categories specified under IAS 32 and IAS 39, such as held to maturity, available for sale, or fair value through profit and loss. The next one is timing of recognition of assets, liabilities, expenses, and income. The next one is basis of measurement of non-current assets such as historical cost and revaluation basis. The last one, for example, which is accrual basis of preparation of financial statement. So for company's policy, we have two companies, which is NYLEX Malaysia BERHAD and LB Aluminium BERHAD. The first one for NYLEX, which is item of property, plant, and equipment are measured at cost less any accumulated depreciation and any accumulated impairment losses. Costs include expenditures that are directly attributable to the acquisition of the asset and any other costs directly attributable to bringing the asset to working condition for its intended use. The next one is all component of non-controlling interest must be measured at face value on the acquisition date unless the MFRS need a different measurement basis. The calculation basis is used on a combination by combination basis. The next one is LB Aluminium BERHAD. For this company's policies, both land and equipment are initially valued at cost. The cost of an asset includes all expenses directly related to its purchase. When an expense is incurred and it is impossible that the future economic benefits associated with subsequent source costs will transfer to the company and the asset's cost will be correctly measured. Subsequent costs are either included in the asset's carrying sum. Next is the carrying capacity of parts that must be replaced is not taken into account. Routine maintenance costs on property, plant, and equipment are reported as they are incurred in benefit of or loss. Each component of a property, plant, and piece of equipment with a significant cost relative to the asset's total cost and a different useful life is depreciated usefully. The next one is accounting estimates. This can be defined as approximation of the sum to be debited or credited in a particular account where no accurate calculation is available. Accounting estimates are often used to determine the carrying value of assets and liabilities in the balance sheet at the end of the particular year, as well as their respective heads in the income statement. The next one is the example of accounting estimates. One of the accounting estimates that a corporation or an agency may use in their business is depreciation expense for land, plants, and equipment. In other terms, depreciation is a financial requirement calculation where the only way to know how much assets have depreciated is to measure financial requirements. This will aid businesses in determining the depreciation form to use even though it does not represent the asset's true value. Next is goodwill. Goodwill generally lasts forever. Its value to the company can change rapidly from year to year. When calculating the worth of goodwill, the accountant should consider qualitative factor. The next one is NYLEX Malaysia BERHAD Company's estimate. For depreciation, the right of use assets are initially valued at cost, which includes the initial sum of the lease liabilities adjusted for any lease payment made on or before the lease start date, with incremental rates varying from 3.5% to 5.5% per annum. For goodwill and fair value changes resulting from the acquisition of a foreign operation on or after January 1, 2006 are treated as assets and liabilities of the foreign operation and are registered within the operating currency and converted in compliance with the foreign currency accounting policy. The next one is LB Aluminium Berhad Company estimates. For depreciation, investments assets are reported at cost less any accrued depreciation and any accumulated impairment losses after initial identification. The value of freehold land does not depreciate. The next one is goodwill. Goodwill with an indefinite useful life is assessed for impairment once a year or more, frequently if changes in circumstances show that the goodwill is at risk. The impairment of goodwill obtained in a corporate merge is assessed as part of the impairment testing of the CGU to which it relates. The next one is cash basis and accrual basis. How to distinguish between both of them? For cash basis, revenue is recorded when money is received, and expenditures are recognized when money is spent according to the cash basis of accounting. For accrual basis, a system of accounting in which profit and expenditures are recorded when they are received rather than when they are purchased or spent. For cash basis, it is used to keep track of transactions that include cash, and for accrual basis, cash and credit transactions are reported using the accrual basis. For accrual cash, for, for cash basis, less expensive than other methods. And for accrual basis, we are anticipating future incomes and expenses. That's all from me. Thank you.
Today I want to talk about the MFRS 101, or we call Malaysian Financial Reporting Standards. Okay, what is the Malaysian Financial Reporting Standard, or we call MFRS 101? The definition of the MFRS 101 is a comprehensive guide that covers various aspects of the preparing and presenting general purpose financial statements, such as those incorporated in the annual reports. Okay, or we call in another is presenting financial statements, MFRS 101. Okay, in a presenting financial statement, they have 5 statements, which is the statement of financial positions, statement of profit or loss and other comprehensive income, statement of changes in equity, statement of cash flows, and the notes to the financial statements. Okay, first I want to talk about the statement of financial position. For the definition is the balance sheets is also known as the statement of financial condition. And the balance sheet shows an organization assets, liability, and equity as of the audit data, which means an important thing that have in the statement of financial position is the assets, liability, and equity. This is very important. It must have in the statement of financial position. Next is the statement of profit or loss and other comprehensive income. The benefit or loss is described in the presentation of financial statement as the balance of revenue less expenditures, excluding the component of other detailed income, which means or in the statement of profit and loss and other comprehensive income, in the statement we need to checking that the company retain profit or loss in the statements. Okay, for the statement of changes in equity, the reconciliation of the opening and closing balance of shareholder equity is known as the declaration of adjustment in equity. It's a financial statement that summarizes the investment concerning the shareholder equity over the course of the fiscal year. The article track improvement in the retained profit or the reserve and the equity capital, such as the issues of new shares and the payment of the dividends. Okay, for the statement of the cash flow, the increase or decrease in the amount of money a company, organization, or entity has is referred as the cash flow. The term is used in the finance to denote the amount of the cash produced or spent over the given period of time. There are several different forms of cash flow, each with its own set of the critical application of the market and financial analysis. Okay, this example of the soft P in the NYLEX Malaysia Berhads, which means the Sophie closed at the 31 May 2090. You see this example. And for LB Aluminium Berhads, the Sophie closed at the 30 April 2019. Okay, this is an example of statement of profit or loss. You can see the examples for the NYLEX. NYLEX for the Sopol Chi is closed at the 30 May 2019. And for the LB Aluminium, the Sopol Chi closed at the 30 April 2019. This is an example of the LB Aluminium Sopol Chi. Okay, for the changes in equity statements, is for the NYLEX examples. You can see the statement is closed on the 30 May 2019. And this is example of the LB Aluminium Berhad. Okay, this is the example of the cash flow of the NYLEX Malaysia Berhads. You can see they close same days, which 31 May 2019. And lastly, for the LB Aluminium Berhad cash flow statements. This is an example. Okay, for the notes to the financial statements, the supplementary notes to a company realized financial statement are known as the financial statement notes. The report clarifies the factor that we made to prepare the figure in the financial statement, as well as the company accounting practice. There exist various categories of customers, such as investment analyst and investor, in the analyzing the financial statement figures. Okay, now lastly I want to show the notes to the financial statements example for the NYLEX Malaysia Berhad, we can see. And lastly, for the LB Aluminium Berhad. That's all for me, thank you.
Will be presenting about MFRS 116, which is about property, plant and equipment. So, the aim of this standard is to define the accounting treatment for property, plant and equipment so that consumers of financial statement can understand details about an entity's investment in property, plant and equipment, as well as adjustment in that investment. The key concern in accounting for property, plant and equipment are the recognition of assets, the assessment of their carrying numbers, and the depreciation changes and impairment losses to be recognized in relation to them. So, I will be talking about disclosure, measurement and recognition of two companies, which is NYLEX Sendirian Berhad and LB Aluminium Sendirian Berhad. So the first one is NYLEX Sendirian Berhad. As for the disclosure, any property, plant and equipment are initially costed. The cost covers expenditure directly related to the assets acquisition. Next is measurement. Property, plant and equipment are listed at cost after initial recognition, less any accrued depreciation and any accumulated impairment losses. The next one is recognition. Comprehensive income in relation to the subsidiary are accounted for reclassified to profit or loss or transferred directly to retained earnings in the same manner as would be required if the relevant assets or liabilities could be disposed of. MFRS 116, which includes property, plant and equipment retained for use in the manufacture or supply of products or services, for leasing to others, or for administrative purposes that are intended to be used throughout several periods. So next is I will be explaining about the disclosure, measurement and recognition for LB Aluminium Sendirian Berhad. Firstly is disclosure. All items of property, plant and equipment are costed. The amount reported can be found in the statement of financial position and notes of financial statement. Next is measurement. After initial recognition, property, plant and equipment are assessed at cost minus any accrued depreciation and any accumulated impairment losses. The cost of property, plant and equipment is depreciated straight line over the approximate useful lives of the properties up to their residual values. Lastly is recognition. The company evaluates all of its property, plant and equipment costs at the time they are incurred. So that's all from me. Thank you.
And I am going to present about MFRS 102 under inventories. Okay, before I go through all the points under MFRS 102, I would like to share with you the aim of this standard. Okay, first thing first, the aim of this standard is to indicate how inventories should be accounted for. The amount of expenses to be recognized as an asset and be carried forward before the related sales are recognized is a primary issue in inventory accounting. Okay, so basically this standard outline how to calculate costs and be considered as expenses, and also teach us how to actually write in net realizable value. Inventory is known as property and we keep for businesses which in type of goods or equipment to be used in manufacturing or delivery process. Okay, we will go through the inventories under NYLEX Sendirian Berhad. For the disclosure, the information is disclosed in NYLEX Sendirian Berhad annual report, and all the amounts stated is using thousand. The company also write down the inventories in net realizable value, and all of this information is be kept in financial statement. The definition of MFRS 102 is still the same as before, but the different things here is about disclosure, measurement, and the recognition. In LB Aluminium Sendirian Berhad, they use lower cost and net realizable value for measuring the inventories. But for measuring costs, they use a weighted average method. Okay, so for the last point is the recognition for LB Aluminium Sendirian Berhad. The profit or loss in property development revenue and cost is also be kept in financial statement. That's all from me. Thank you very much.